Hi there, Rob Pearlstone here again for RE/MAX Twin City and Kitchener, here with my colleague Mark Benkovic from Excel Mortgage. Hi Mark, how are you today?
Hey Rob, I'm great, how are you?
Good, thanks. I wanted to talk to Mark today about this stress test that we've heard so much about, and one of the things I wanted to ask you, Mark, is how is this going to impact people who have an existing mortgage and say it's coming up for renewal in 2018 or 2019 for that matter, anytime after the stress test is introduced?
Okay, well, I think the simple answer is things are going to get more confusing and more complicated as of January 1st, 2018.
Okay.
For anybody that has an existing mortgage coming up for renewal, they're going to have to make some hard decisions. They'll be able to renew their existing mortgage at the same lender as long as their income situation hasn't deteriorated badly.
Right.
But if they want to look at possibly a better deal, lower interest rate, longer amortization, refinancing, whatever, if they want to shop around, they're going to have to deal with the stress test first at the different lender to see if they qualify. And the end result is going to be that a lot of people are going to be more restricted in terms of their flexibility, and they may just end up kind of staying captive at the existing lender as a result of the new stress test.
Gotcha.
Does that make sense?
It does. I guess it's a way for them to, they feel more protected if they stick with their current lender, regardless of whether or not they're happy with the level of service that they've received.
Exactly. The easy choice will be do nothing, stay where I am.
Right.
The harder choice is do more calculations than ever, because if you were going to move your mortgage somewhere else, you always have to calculate what the potential discharge fee and mortgage early redemption penalty is, and then work that out over time to see over the next, say, 5 years, am I better off or worse off by staying or moving?
Gotcha.
So it's just a simple math number crunching
Right.
kind of scenario, but there's going to be more of it because it's more confusing and more complicated than ever before due to the stress test.
Gotcha. Gotcha. Okay, thank you.
You're welcome.
How, in your view, do you feel that this is going to impact my line, the real estate industry? I understand that it's obviously going to be impacting both buyers and sellers, but wanted to get, from your point of view, from your perspective, how this is going to impact the real estate business.
Okay, Rob, well, where do I start? I guess the real answer is it depends, because it's going to be interesting 2018 going forward.
Right, right.
Let's talk about the different categories of people that might be affected as a result of the stress test.
Sure, sure.
Let's start with the simplest one, cash buyers.
Okay.
Whether they're domestic or foreign cash buyers, the most likely benefit from them will be possibly lower house prices, most likely.
Right.
I can't see prices going up as much as a result of this because there may be less buyers and sellers will have to adjust prices.
Right. Which I guess leads into the next category of buyers, which you can correct me if I'm wrong, but buyers, because they'll be qualifying for less of a mortgage than they normally would, in 2016 or 2017, their affordability decreases, therefore sellers will either have to decrease their ask price on a home or decrease their expectations in terms of what they can get for a home as a result of buyers not being able to afford as much as they would in a 2017 market.
Exactly, and I think that'll play out in a bigger way on the low to mid-sized price homes, because that's where the majority of the activity is anyway.
Right.
And you're absolutely correct in your assessment that buyers in general, a certain segment, because of limited incomes, will qualify for less mortgage and therefore they qualify for a cheaper home.
Right.
And sellers, on the other hand, we've seen prices already adjust from the previous spring of 2017. Prices are down a little bit.
Yep.
They may be pushed further down if we see a sizable number of buyers being restricted to the amount that they can borrow for mortgages, and therefore they're going to be able to offer lower prices.
Right.
And that'll take some time for everybody to address their emotions and psychology.
Right, right, okay. Especially with sellers who, maybe a seller who was in a position where they wanted to list in 2017 and saw, we've seen in previous videos, Mark, how prices have just been continually increasing, and people who maybe wanted to sell in 2017 have thought, well, I'll wait till 2018 because my house is going to be worth another 15% more. Well, the reality is that may not be the case as a result of the stress test.
Well, from the perspective of a real estate agent or a seller,
Yeah.
it'd be better to sell that place in November or December of 2017 than
Right.
wait for 2018, in my opinion.
Right.
Because I think from January 1st, 2018 forward, the seller is going to face fewer buyers potentially because of the stress that's restricting the amount that people will qualify for.
Mhm. Okay, that makes sense.
Okay?
Okay, thanks. I wanted to thank you for coming in today and meeting with me and just to talk about this stress test to further educate myself as well as anyone who's viewing this at home. If anyone has any questions for Mark or myself, as always, I will be posting our contact information at the end of the video. In addition, you're welcome to post any comments or questions in the comment section below on Facebook.
Thanks for the opportunity, Rob. It's certainly become a more confusing, more complex thing to do, and I'm thankful for the opportunity to educate.
Wonderful. Thanks so much, Mark.
Thanks. Have a great week.
You too.